Hi, I'm Ethan Devitt, and welcome to FiftyFaces TV. This is part one of a three-part series in which we are interviewing a prominent thought leader in the field of sustainable finance and responsible investing. We are dividing this into three parts and are excited to bring you part one, where we discuss the challenges of asset allocation with a view to climate change mitigation and focusing on what that means for a portfolio. We're delighted to be joined today by Arun Kelshiker, who is former head of asset allocation and portfolio strategy at Standard Chartered. He is now involved in a range of projects with stakeholders as diverse as EBRD and University of Cambridge around the topics of responsible investing and sustainable finance. He is vice chair of CFA UK's investment committee, as well as a board member of Philanthropy Impact. Welcome, Arun. Thanks for joining us here.
Pleasure to be here, Ethan.
In part one of this episode, we're going to speak about the climate crisis and how that is being reflected in investment policy, in particular around strategic asset allocation. Arun, can you tell us how, from your perspective, investors are reflecting this important concern around the climate crisis in their strategic asset allocation?
So if we think about, institutional investing, especially with respect to the climate crisis and other things, policies is really at the forefront of ensuring that, we align correctly with the way in which those assets are being invested. If we think about the current assets under management, which are being allocated towards sustainable investing, it's currently around 30.4 trillion assets globally, which are being allocated. And that's generally around 30 to 35% of overall assets under management. We've got tools that help that sort of process to take place. So within UK pension schemes, there is the Statement on Investment Principles, for example, the SIP. We've also got other frameworks that are helping to sort of manage that overall direction or the flow of funds. And we've got things like the TCFD. So that's the Task Force for Climate-Related Financial Disclosures, where it's a framework by which investors basically share how they are investing their assets with the consideration of climate in mind. And also, if we look at a very popular framework which is being used by investors, so the Institutional Investors Group on Climate Change, we have their Net Zero Investment Framework, which clearly stipulates that there are very, very clear areas in which, including strategic asset allocation, investors are being encouraged to use climate considerations into that overall portfolio construction strategy and allocation. So with those tools and with those frameworks, that's how, from the institutional investment side, we are continuing to allocate within sustainable investment strategies and responsible investing assets.
And can you speak about how specifically that would affect strategic asset allocation? Would it be just the case that investors, say, would take a slice of all of their regional asset allocation buckets, such as equities, fixed income, alternatives, and allocate a portion of that to climate change resilience or to addressing the climate crisis? Or does this have to permeate the entire portfolio? For example, would all equities have to look this way?
So different investors have been using different methodologies and strategies for it. The most effective way is to think about it holistically. So more and more people and parties are thinking of applying it within their strategic asset allocation. And the idea is that you're then using ESG considerations, so environmental, social, and governance considerations, through actually investing the entire assets of the portfolio. And that sort of traverses across different asset classes, so across equities, fixed income, and alternatives, for example. And so using that sort of strategy is something that's definitely become far more popular. You'll find that it sort of also resonates with other concepts, which sort of institutional investors have been exploring for a period of time, but which have sort of come to, have gained popularity, especially within recent years. So, for instance, universal ownership. The idea that institutional investors basically are effectively buying a slice of the economy, just given the size and scale of their investments. And so by buying a slice of the economy, they're actually, as investors, running a systemic risk to impacts to that overall economy. And so need to be thoughtful and considerate with respect to how those assets are actually invested, with the broader scope of impacts in mind, to try and obviously meet their fiduciary responsibilities.
And obviously, strategic asset allocation has many inputs from the outset, such as capital market assumptions, and that then translates into different allocations, perhaps an optimizer that will be allocated across different buckets. Could you maybe speak about a case study of an institutional investor that you know, taking us right from that input stage through to the allocation and how they have reflected their concern around the climate crisis in their portfolio.
Absolutely. And you've talked about strategic asset allocation, and it is in essence, capital market assumptions, the risk return expectations for asset classes. And that's basically been the backbone of how we've constructed portfolios over the course of recent decades. Now, what we're finding is that those capital market assumptions, expected risk and return on asset classes, they are heavily impacted or potentially influenced by obviously some of the paradigm shifts which are taking place. So the climate crisis, for example, being a very clear factor which has a huge impact. So going down that road and expanding on that idea, USS, one of the UK's largest pension fund, have sort of gone down the road of using something along the lines of a narratives-based climate scenario analysis modeling process, which kind of incorporates that aspect also into their strategic asset allocation, and they very innovatively look towards incorporating two major levers potentially for how the climate crisis may well pull out. And so the first one is technological developments, and the second one is policy implementation. So we know that both of those levers are going to be key with respect to how the transition pathway continues to develop and evolve as we sort of journey towards what becomes ultimately our sustainable future as we navigate the climate crisis. So USS have adopted that approach and are continuing to sort of drive definitely innovation and leadership within strategic asset allocation, considering the climate crisis in mind.
Well, that was a fascinating discussion of strategic asset allocation and how it relates to the climate crisis. We look forward to part 2. Thank you very much, Arun, for coming here and for sharing your insights with us.
Thanks very much, Ethan.
I'm Ethan Devitt. Thank you for listening to 50Faces TV.